This week, why a frozen housing market may make reverse mortgages more acceptable.
Building relationships is the way Mutual of Omaha has grown into one of the leading financial services companies in the world. Our reverse mortgage wholesale division is proud to carry on this 100-plus year tradition. To your borrowers, a reverse mortgage is more than a transaction. It's a promise of a better, more stress-free life. Our goal is to provide you, our valued client, with the best service and support possible so you can focus on helping your borrowers achieve the retirement of their dreams.
Welcome back to the Industry Leader Update, and please thank our new sponsor, Mutual of Omaha, by clicking on their banner below this video. The U.S. housing market is frozen solid with mortgage rates that have more than doubled and median home prices that remain near record levels. In a frozen real estate market, you have property sales that are sluggish and housing values that have stagnated, and older homeowners may find themselves hesitant to explore traditional options for unlocking the value in their home. Today, we're going to examine how a frozen market can actually increase the appeal of reverse mortgages and why older homeowners who may wish to sell or relocate are increasingly reluctant to do so. The benefit for reverse mortgage originators is that the better they understand the real estate market in which they originate, they have the ability to craft a more informed and effective marketing and sales strategy even in today's market. Now, earlier this month, we looked at the forces at play that we have in the housing market, and one factor that we're seeing across much of the western U.S. is excessive payment to earnings ratios, or PE ratios. This ratio is determined by dividing a county's median home listing price by the area's median household income. Now, many markets have seen that ratio soar by 40% or even more since the pandemic. For example, in Ada County in Boise, Idaho, that market, the median home income is $73,000, while the median home listing price is $598,000. That means the median home price is 8.16 times the local median income. The areas you see shaded in dark blue on the SnapForce CRM map do have a higher price to earnings ratio, which means that that market is out of whack. And then we see that metros such as Miami, Florida, Salt Lake City, Utah, and also Austin, Texas, they're seeing that their median home listing prices to median income ratios have skyrocketed in the wake of the coronavirus pandemic. That thanks to the Federal Reserve's slashing of interest rates, which helped create this housing bubble in the first place. Now, consequently, we're seeing that the older homeowners are being directly impacted in these markets where you have housing affordability that is deteriorated to new lows. And consequently, they're seeing that they have fewer willing and able home buyers in their market that can actually purchase their home. But more specifically, the older homeowner may actually wish to postpone or even shelve a planned relocation, perhaps to downsize or right size or even move near their family members. And that's because they feel somewhat marooned in today's housing market, but they've likely accumulated substantial equity, but they have no practical means of accessing it outside of finding a willing buyer or getting a reverse mortgage, of course. Now, those homeowners who may find a buyer could be reluctant even to sell because they know they're going to have to go out in today's market and purchase another home at today's artificially inflated prices. But the exception to this scenario would be those that sell in a high value market and then relocate to a city or an area that has a lower median home price. Now, in that instance, the HECM for purchase is an absolute force multiplier in both purchasing power and cash flow management. In a frozen real estate market, seniors may be initially hesitant to explore financial options or equity loans, such as a reverse mortgage. However, the reverse mortgage offers numerous unique benefits, irrespective of market conditions. And that allows a borrower to tap into a portion of their home's value, of course, without having to sell and relocate. Now, while today's interest rates are certainly not ideal, most home values remain well above their 2019 levels. Now, as with any financial decision, a homeowner should consult with a trusted financial professional and evaluate their unique circumstances before they do get a reverse mortgage. But what are your thoughts? Do you believe that a frozen housing market where home prices are stagnant may actually make the reverse mortgage more appealing? You can leave your comments in the comment section below, and if you would be so kind as to share this week's video on your LinkedIn or Facebook profiles. Don't forget we have a YouTube channel where you can subscribe, and if you can hit that like button if you appreciated today's episode, that helps us in the algorithm, by the way. And each and every week you can catch up on your reverse mortgage news. You can do so on our weekly podcast, HECM World Weekly. We're now on Spotify, and as we have been for over a decade, we're on iTunes, so Apple users can listen and subscribe there. Thanks so much for joining us, and be sure to return next week for more reverse mortgage news, commentary, and analysis here at HECM World.